Let's talk about Broadcom. Now, you hear about NVIDIA all the time, but Broadcom is the company that's actually building the superhighways for all that AI traffic. They're kind of the hidden architects of our entire AI future. But here's the thing. There's a real paradox at the heart of this company, a real tightrope walk they're on, and that's exactly what we're going to unpack.
So here's the game plan. We're going to kick things off with a pretty jaw-dropping $42 million question. Then, we'll dive into how they became the architects of this whole AI era. After that, we'll look at their software side. It's a real powerhouse. Then, a little reality check for the market. And finally, we'll wrap it all up with what I'm calling the Broadcom paradox.
All right, first up, let's talk about a sale that got everyone's attention. Imagine this, the company's on top of the world, absolutely crushing it, and then this happens. It really makes you scratch your head and ask, wait, what's really going on here?
So what's the number? Get this, $42,380,000. That's not a company profit. That's what the CEO, Hock Tan, personally pocketed in a single day, just from selling his own company's stock. I mean, wow, that is a staggering amount of money, and it definitely gets you thinking.
And you know, it wasn't just him. The whole executive team, together, they unloaded over $100 million worth of stock. When you see a bunch of insiders selling like that all at once, you can't help but wonder, what do they know that the rest of us don't?
Now, the official line is, it's just personal financial planning, tax stuff. And hey, maybe it is. But to really figure out if this is a red flag or just business as usual, we've got to look at the other side of the coin. Just how unbelievably dominant Broadcom really is.
Okay, so let's flip the script. Because while all that stock selling was happening, the company itself was busy building an empire. I mean, they were literally becoming the unshakable foundation of the entire AI revolution.
Yeah, everyone talks about the flashy GPUs. They get all the press. But think of Broadcom as the plumber of the AI world. It might not sound glamorous, but they build all the essential pipes, the connectors, the stuff that lets all that insane amount of data just flow. Without their work, all those powerful AI engines would just be sitting there, starving for data.
And this right here, this is their secret sauce. It's what makes them so unique. You look at their revenue and you can see it's brilliantly split. 61% is semiconductor solutions, that's the raw hardware muscle, but then you've got this other 39% from infrastructure software, which is just a pure high-margin cash flow machine. It is absolutely the best of both worlds.
When it comes to hardware, these guys are playing a different game. Their Tomahawk switches, they're the industry's gold standard. Think of them like massive, super efficient highway interchanges, but for AI data. And they're the ones behind the scenes building custom-designed chips for the biggest names out there. Google's TPU, Meta's MTI, even a project with OpenAI. They are literally building the custom engines that power the future.
Okay, so there's this quiet but super important battle happening inside every AI data center. It's basically a fight over how everything gets connected. On one side, you have NVIDIA's proprietary closed-off system called InfiniBand. On the other, you have Broadcom pushing for good old Ethernet, an open standard anyone can use. And guess what? Broadcom's open approach is starting to win. They call it the Ethernet crossover, and believe me, it is a total game changer.
But like we said, the hardware is only half the story, right? Remember that huge chunk of software revenue we saw? Well, a huge piece of that puzzle comes from one massive, game-changing move, their $69 billion acquisition of VMware.
The CEO, Hock Tan, has a very clear playbook. Go out and buy businesses that are absolutely essential and pretty much irreplaceable. This timeline shows you exactly how he's done it, step by step. Brocade, CA, Symantec, culminating in VMware, which was really the crown jewel. That's the deal that turned them into the powerhouse they are today.
So, did this whole strategy pay off? Oh, you better believe it. The results are just staggering. Let's just quickly run through some of these numbers. First off, $18 billion. That's their revenue for a single quarter. Just incredible.
And it gets better. If you zoom in on just the AI part of their chip business, it's not just growing, it is exploding. We're talking 74% growth year over year.
But this might be the most impressive number of all. A 68% adjusted profit margin. I mean, those are numbers you expect to see from a pure software company, not a hardware giant. It's just absolute proof that their hybrid model is pure financial genius.
Okay, so the numbers are amazing, the strategy is brilliant, which brings us back to our first question. If everything's so fantastic, why are the insiders selling? Why is the market so jittery? It's time for a little reality check.
Right. So, even with those blockbuster results, the stock recently took an 11.5% nosedive in a single day. Why? Well, Wall Street has a name for it: fear of heights. Basically, the stock has flown so high, so fast, that investors are getting vertigo. When expectations are in the stratosphere, anything less than absolute perfection can send people running for the exits.
And look, it's not just feelings or market jitters. There are very real, tangible risks on the horizon. You've got regulators in Europe taking a very hard look at VMware's new business model. You've got a massive reliance on just a handful of giant customers like Apple and Google. And let's not forget, they're still carrying around $65 billion in debt from that VMware deal. That's a lot to worry about.
So all of this, it brings us right to the core of the issue, the Broadcom paradox. You have this unstoppable business on one side and all these serious risks on the other. How do you square that circle?
It really boils down to this. The bull case is simple, right? They're indispensable to AI, they're a cash flow machine with dominant franchises and crazy profitability. Can't argue with that. But the bear case is just as strong. The valuation is stretched, they rely way too heavily on just a few customers, and you've got those big regulatory and debt clouds hanging over.
So that leaves us with the one big question, the one everyone's trying to answer. Is Broadcom the solid, stable backbone that the entire AI future is going to be built on? Or is it a giant flying a little too close to the sun? The answer, whichever way it goes, is going to have massive ripple effects across the entire tech world.